Stryzewski, CEO of Sound Planning Group. David, good to see you. So what's going on here? Critics are taking this opportunity to bash the president, saying that he promised to bring prices down on day one. What's going on?
Well, what's interesting is actually if you look at the Trueflation, which is actually a measure of actual costs, actual things that are happening in the economy and people are spending money on, rates of inflation are actually down since he took office. They are up recently because there's a lot of fear going on right now. And we've got a lot of GDP changes that are taking place. And of course, that's what's going to happen when you have such differences in how policy is going to be implemented, differences in tariffs and different things. And so, I think that people just need to hold their horses here. Inflation and some of these volatile things could be happening right now. But I think that we are, on a good long-term trajectory. But there is no question today that the consumer's feeling it in a different way. And, if we look at 70% of GDP being the consumer, there's some interesting reports out right now today that are talking about how things are just falling off a cliff right now, at least as far as expectations go.
Speaking of volatile prices, that includes food. Speaking of groceries, egg prices were a major media story with Trump getting the blame despite the price hike happening under Biden after millions of chickens were killed. So now that prices have actually dropped by half, guess what? Silence. Instead, the focus this week is really on that Signal group chat. Funny how things work, right? What else is being ignored, do you think, that should be getting coverage, David?
Well, I think a lot of things are getting ignored, specifically as far as like how the average consumer is doing. And you're right. Our priorities as far as what we're paying attention to are maybe more into gossip and things that are not as important on the day-to-day basis in all reality as the things like the cost of groceries and eggs and real staples in life and the cost of, oil that's been going down. There are a number of things that have actually improved. And so we will see other challenges though. I mean, hey, what's going to happen right now in used vehicles with tariffs? That could be a challenge. There could be some inflation things ahead. And so I think that there's a lot of positive. There's also some negatives here. And so we need to just kind of have a clear perspective that there are things changing today. And I know that it's probably not comfortable for a lot of people. But prices are certainly up in a lot of areas, but they're certainly down in a lot of areas too. And I know that that's helping at least my family. I ate eggs this morning and,
it's a give and take, right, David?
That's right.
Since you brought up cars, President Trump's auto tariffs are set to hit on April 2nd. He calls that day Liberation Day. A 25% tariff on foreign-made cars. But if you buy an American-made car, you get a tax break. You can write off your auto loan interest. Even the UAW president, Sean Fain, who's not a Trump fan, he's backing the tariffs as a way to rebuild American manufacturing. But Canada, they're not happy. Even the conservative leaders up north, they're criticizing the tariffs, warning that they will hurt both economies. So what do you think? Will they?
Well, I think that tariffs are being used as more of a reshoring play. It's not really a great idea to just go and put all your money in long dated treasuries right now, but investing in the United States long term, that's a great move. And so if Toyota comes over and puts, $1 trillion into auto manufacturing here in the United States, well, that would make them a recipient of these more favorable taxes that Americans, that consumer, 70% of the GDP would be benefiting from by purchasing those particular cars. And so, Canada's on the chopping block for some things, and so they're going to obviously be saber rattling back and forth here. But I think that we're going to see lower costs in the United States with manufacturing, et cetera. The question is ultimately going to be who's going to do these jobs and in the manufacturing space, because I don't see a lot of young kids getting fired up about those types of positions.
Yeah, I mean, the trade war will ultimately hurt Canada more than it would hurt us. Their GDP, their exports make up 37% of their GDP on average. So back to the U.S. with the numbers today, the economic data. Is the R word being floated? Are we looking at stagflation at the very least? What do you think?
Well, you just said that right, stagflation. So higher PCE, even though we've just been talking about there's some areas where that's not true. Stagnant GDP. So that means that our growth is slowing down. You got a scared consumer right now. Consumers are very afraid of their incomes going down in the future relative to the cost of everything. Everything's up almost 27% according to Trueflation since 2020. So I like to put on my 2020 vision glasses here, and I like to see where we were and where we are. And that's a very different place. And so I think that we're going to see some rates, on the Fed side, hopefully come down. But ultimately, that's going to be as a result of volatility here in the short term. So I think President Trump's going to be okay with the stock market crashing. He's signaling this. Besson is signaling about this. That causes people to move more into risk off. That then forces the Fed perhaps to reduce rates at their next meetings, and also helps to do something that I don't think is really being advertised, and that is that we've got $6 trillion that needs to be refinanced. So we can refinance those dollars and ultimately get better rates here for the taxpayer and those companies if that type of a scenario plays out. So that might be major volatility in the short term, but a longer and midterm that looks amazing here in the United States.
Oh, you mentioned the possible crash of the stock market, reset of the economy, possibly. What assets stand to benefit the most in that scenario?
Well, as we're talking about inflation, you should look at the price of gold today. In U.S. dollar terms, it's never cost more. So that's over $31,000, and silver is teetering on 35. These are big moments that have not been there before. I think all roads lead to gold and silver and metal miners being a lot more attractive here in the future. By the way, we haven't even audited Fort Knox yet, and who knows ultimately what's happening there. But this is another thing to be watching for. Look at all the inflows of gold and silver coming to the United States and other major nations right now. We are pulling in more than is being produced by far. And so you can't keep doing that forever. There's a short squeeze that's going to be happening. And I think just buckle up, because those prices are going to skyrocket in the upside here as time goes along.
Great insight as always, David Stryzewski, CEO of Sound Planning Group. Appreciate your time today.
Thank you.